Hey everyone, the market opened lower this morning, gapping down right above the 580 strike that we mentioned in yesterday's video. We bounced right off of that level, right back into positive gamma exposure territory. You can see currently the zero gamma level is at the 582 strike here, identified by the blue line. And if we just zoom back out here, you can see this pattern that's really been emerging over the last week, a consolidation pattern where the market is continuing to trade in a narrower and narrower range, and these typically result in some sort of move either to the upside or to the downside. So I think that point is coming tomorrow. The levels that we're going to be watching, as we've been mentioning, 585 to 595. That is where the majority of the gamma exposure continues to be. I think that lends to a bias to the upside. If for some reason we do break this 580 level, the first stop that I'll be watching is going to be the 575 strike.
Hey, Anthony, noticed some unusual things on the VIX today. We had very high volume at this 13 strike. That blue bar represents 293,000 option contracts traded at that 13 level. And this is right at our lower, a little bit below our lower sigma level. It's definitely well below the 15 area we've brought attention to recently when we saw the GEX structure shift downward. And when we saw GEX shift downward, that was a good indication. Even when we were still in the 19 area, since then we've at least moved down somewhat toward 18. I still think 15 is potentially a live target. So people trade the VIX for a lot of reasons. Hedging is a big part of it. And in November, it's November 20 that represents the VIX option expiration. So we have on the negative side, we have this 15 and 16 strike that are large clusters. On the positive side, we have 20. So at least the way the option market's positioned right now, 13 is not something that's imminently expected, but we can see this change over time. And that is interesting that we saw that big volume there at 13. Looking at the chart, what I see is we're below the whole moving average. We rejected from there again today, and now we're below the middle Keltner channel. I mean, sure, if you look at this, it would seem to indicate, yeah, we could go all the way down. But we've had this trend line going back to July that has 15 as sort of a floor. So I don't know what to make of that, but if anything, it might actually spike short term before making its way finally down to 15. But it's something to pay attention to in my view.
Yeah, thanks, Sean. You've been spot on with your VIX call really over the last couple of weeks since we hit that high just above 23, calling for negative downside. So good job calling that there. And, we mentioned in last night's video the lack of economic data for this week. The next major economic release is scheduled for Friday with durable goods orders. We are in the middle of earnings season, and so far, 79% of companies that have reported positive EPS surprise. This typically hovers in the kind of like 73 to 75% range. So it's always skewed higher. Just the game that Wall Street plays with their positive EPS surprises. But still, this 79% number is higher than the average expected. And so I think, all of this to say that there's a pretty good basis for lower volatility and higher prices, generally speaking, over the coming weeks into the election.
Thanks, Anthony. It's interesting when we have companies that beat earnings, yet their stock prices falter. It shows that there's also an aspect of expectations that goes into how these companies perform after they report earnings, even if they beat. And there's a number of ways to generate different trade ideas. One thing I like to do is take a look at this heat map. This is finviz.com, but you can find heat maps on different sites. And I just sometimes look at the tickers that maybe were really hated that day. And we had a number of companies report earnings today that did not, even though they may have beat, they just didn't react very well. And so I was looking at GE, Lockheed, and Verizon. Lockheed, let's take a closer look at that, because if we go over here to the gamma picture, once again, our dealer cluster zone nailed the area where selling occurred. Now we're almost down here to the G2 dealer cluster, which begins at 565. And we still have positive gamma. We still have a pretty big cluster at 600. And going to the chart, it's interesting. My Keltner channels match up pretty closely to that 565 we saw on the G2 dealer cluster. So, pretty big spill off here. But for long-term play, I like the idea of buying Lockheed, especially. I don't go for perfection with hitting these zones, but if we can get kind of a little bit closer by a few dollars, toward this 565 to 570 area, it might be worth taking a bite, if it fits in with someone's risk profile and the other things that they have in their portfolio.
Yeah, thanks for that, Sean. Lockheed also a indirect elections play as well, so definitely one to watch there. Next, I want to talk about Apple. Apple closing right around the 236 level. A few videos ago, we mentioned this 235 level. You can see here on the chart going all the way back to July. 235 to 236 range has really been a major area of resistance, and just over the last several trading sessions over the last week, we've really bumped up against this a couple of times here. Big volume coming in at the 235 strike notated by this blue bar. The purple bars are our gamma exposure levels. There's huge net gamma exposure on the positive side here at the 240 strike. That is our upper dealer cluster zone, and that is our immediate target if we can just get above this 236 to 236 and a half area right in here. You can see continued positive gamma exposure going all the way up to the 250 strike. So it looks to me like market participants are bullish on Apple and are piling into the options market. Earnings is coming up, I believe, next week or the week after. So pay attention to the earnings date. But this is one we're definitely going to have on our radar. Next, let's just take a look at Google. Google trading right around the 165 level. It's got earnings on October 29th, so keep that in mind. However, we can see that price action has really been bouncing up and down between these two dealer cluster levels, kind of coming into a narrower range here. This is often a pattern we see prior to big events or big earnings releases. And that's definitely the case here with Google. The largest gamma exposure concentration is right at the 165 level, which is right where we're trading now. However, there is volume coming in here at these upper strikes at 168 and 170. And so this is a pattern we're seeing over and over and over again with a lot of these mega cap tech names, is positive gamma exposure to the upside, bullish momentum, consolidating patterns. It looks like everything's converging here in the next couple of weeks. Earnings right before the election, and Google is no exception. And so we'll be watching this for a potential breakout above the 166 level for potentially a move into 170. By the way, don't forget to check out our community Discord. We're discussing all of these topics and more every single trading session. We've got a lot of great traders in there sharing their thoughts and market analysis. I'll put a link in the description below. You can check that out for free. Also, if you're interested in accessing our gamma exposure dashboard and option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. Again, I'll put a link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.